40 record highs this year for gold, but silver hasn't even hit one record high. The great opportunity would be timing this silver entry and having a significant amount of silver. There's no reason for gold to pull back. And I want to mention a couple of things here that people really need to understand, okay? You're not going to get the $200, $300 pullback in gold that you think you're going to get. You're not going to get that.
SD Bullion is at it again, but this time with a monster box full of Silver Tree of Life coins. Enter today at sdbullion.com/sweepstakes. Mukarram, what's up, my friend? How you doing?
Hi, Yankee. How are you?
I'm doing great. Geopolitical conflict that we're seeing. Since the last time we talked, it's gotten hotter, especially with Iran and Israel, right?
This week we've been trading oil and oil-related stocks.
Yeah.
If Israel attacks any of the oil sites in Iran, now that's a big deal. They produce more than about 2 million or 2.5 million barrels a day. They also control the Strait of Hormuz, right?
Mm-hmm.
That's the shipping channel for oil. That would be significant, not just because oil prices will go up, but because the stock market will come down quite a bit if there's an escalation or a deterioration of this situation, right? Just a bit of speculation. I don't want to put the net out too far, right? I think when you go back and look at 6 months ago, the way they were going about this war or executing the different strategies, I think this was planned. Meaning, if you look at it from Iran's side, they wanted Israel to be fighting on many different fronts, right? And being like at a point like sometimes stretched, because they would want that. In the same way, Israel, when they attacked Gaza and then they had Lebanon in their sights, and I think finally they do have Iran in their sights. This is why I'm urging everyone to really think about what would the conflict between Israel and Iran look like. Not Israel and Palestine, or not Israel and Lebanon, or Iran and Lebanon, but what would that conflict look like? And how would that translate into gold prices, into alternative asset prices? And how can you protect your money from the stock market? Because usually during wars, stock markets come down. But you never know how things could unfold, based on which countries will join with whom, especially it's been a war that's been going on for too long, right? And there's even 2 days ago, Macron, I think, came on, gave a speech where he says he wants to have an arms embargo against Israel. So this is why as it goes on and continues, you're going to have an escalation, and there's going to be a tipping point here.
And that is a factor, I believe, in the price of gold as a hedge against uncertainty. There are other factors as well here. U.S. economy adding 254,000 jobs. Surprising, people.
This is the beautiful clown show that we have to navigate with the interest rates and how the whole Wall Street acts. But again, so I'll give you both sides of the story. First, what the clown show is like, and then how do we manage that, right?
Yep.
So we did that bigger than expected rate cut. Remember the 50 basis points?
Yes.
That wasn't something that was expected. 25 basis points. Then they did the 50. Now, when they did the 50, Jerome Powell, chair of the Fed, he did say something. He said, now the central bank has shifted its focus from combating high inflation to labor market stability. That's a very important. See, what we do is we always look at the transcript of the conference or the speech, because within there we call it Fed speak. We kind of see what they're hinting at and what could happen, because that's how you have to trade if you want to make significant returns and investments to grow. It's not what they say now, but what are they expecting to do, right? So
Right.
A couple of days before that, there was a 100% expectation that there's going to be a 25 basis point cut in November. Okay.
Wow.
But then after that number came out, now there's about an 80% expectation, and then there's the rest. They believe that there might not be another cut. Now, here's how we got to navigate this. When the Fed makes a change like that, which I call a pivot, okay, when they've made that change, that doesn't mean they're going to immediately go back to raising rates or anything like that. So you have to understand that once the noise settles, we're still going to be in an easing environment, right? Interest rate easing environment. So if they cut more times in the next 6 months than they have in the last 4 years, alternative assets that are priced in dollars, where the dollar comes down, will go up significantly. right?
Mm-hmm.
Prices of commodities will move higher. And if you look at history, in any easing cycle, you've always seen a progressive, like the price of gold may ease out a little bit in the beginning and then, but progressively grows higher as the dollar comes down. Okay. So you'll see that bull market become stronger and stronger. This is why Bank of America and Citigroup, I think just a couple of weeks ago, they said they see gold at $3,000 next year.
You need to be stacking this stuff physically first and primarily. That is your priority, in my opinion. The physical gold, the physical silver.
If you are someone who's a novice or you have like you've been investing, but really you're a passive investor,
Mm-hmm.
meaning you're contributing money into an IRA, a 401k, you continue to work hard, you try to get the best done for your family, but you really don't understand the markets or you don't know how to navigate your net worth to a different level. This is a very complicated market. It's a very, very complicated market nowadays, simply because I'll give you just maybe 2 or 3 reasons why, and that can resonate with people simply because they understand it. One, nowadays you can wake up in the morning and the market could be up significantly, and by the time you go to lunch, the market's down completely. Like it's given up all its gains. That's not a healthy market, especially in the stock market. Like if you look at equities, completely like bizarre movement, right? So it's very complicated. People think, oh, well, that's a bad market, I shouldn't be trading that, but you just don't know how to navigate it. That's why you need to be with a team that has been through things like this and they know how to navigate what I call sensible volatility and nonsensical volatility. When there's nonsensical volatility, you want to stay away from it, right?
Mm-hmm.
Now, here's the difference. Go back and look at metals prices. Go back and look at physical metals prices. They've been trending, right? A trending market is your friend.
Right.
$500 to $400 to $500, right? Started at 1,800, now it's at 2,600 plus. And so it's that 5 steps up, 2 steps down, 5 steps. So that's what I call sensible volatility. It's not this nonsensical volatility where, it's up $200 and then down $200 the next 2 weeks. It doesn't make sense. This is also the reason, guys, and everyone out there, I'm letting you know, just because gold has gone up in price significantly, like $400 to $500 in the last few months, it doesn't mean that precious metals have been priced out for you. 40 record highs for gold, 40 this year alone, 40 record highs.
And
And
what
here's what's
about
cool.
and what
Gold's
about
up 28% when the S&P 500 is up only 21%
and
the
what
whole
about
year.
silver? What about silver? How many
Just
record highs?
not even one record high.
Not
Not
even
even
one.
one record high. So come on, move a significant amount of money
Oh my
in
goodness.
silver and catch this, what I call the arbitrage, the intelligent arbitrage, because where there's a $400 to $500 movement to catch up on, and you still have silver spot at $32, I mean, come on. The great opportunity would be timing this silver entry and having a significant amount of silver, simply because there's all this potential energy, right? That's lagging. Silver has not run. It will convert into kinetic and then significantly run up. So just to let you know, now the strategy, because this is also great because when you work with us as a team, knowing how to navigate these with different strategies, and I'll give you one strategy for some of the clients who are coming in now, we may purchase the silver and then wait a little bit on the gold. It's because we believe that gold could pull back a little, right? Even if it pulls back $50 or, $75, not a big deal. Then we'll buy the gold. I don't think you'll see a bigger pullback in gold like heading up to the election. I feel like, especially with all the geopolitical tensions out there right now, there's no reason for gold to pull back. And I want to mention a couple of things here that people really need to understand, okay? You're not going to get the $200, $300 pullback in gold that you think you're going to get. You're not going to get that because gold is in what we call an embedded bull market, okay? It's an embedded bull market. And what that means, and I hope some of the viewers remember, about 5-6 months ago, we used to say gold is in a baby bull market.
Yep.
A baby bull market. You remember that, right,
Yes,
Yankee?
I do. I sure do.
Baby bull market. You were like, what does that mean, Mukarram? It means it's just beginning. It's like an infant. It's just, it just came out. No one's seeing it. But now it's an embedded bull market. And what that means is if you get a $50 pullback or $60 pullback, not a big deal. It's a great time to just buy in because that's maybe those 2 steps back that you get, 5 steps up, the 2 steps down, right? Silver is going to become a trending bull market, right? It hasn't gotten embedded yet. It'll be trending. And what that means is it's going to catch up. And the moment it breaks through those most recent highs, closes on Friday afternoons well over their highs, you're going to see 40 faster than 25 or 30s again, right? Because that's what the math is showing. So what I mean by this is, when I say, okay, when some clients are coming in right now, unless they want to be, in gold and silver. First of all, we love silver more than gold, okay? So there's a way that we navigate that in percentages. The other thing is, if a client is open to it, we may wait on the gold purchase just for a few days, but we'll buy the silver first. And then let gold pull back maybe $20, $15, and then buy in like that.
Is that that's how you're guiding your clients with some of this?
Yeah, because
right?
the guidance changes as the market changes, right?
All right.
So, but that's very different to you working with like just metals dealers, the run-of-the-mill metals dealers out there, because all they want to do is sell you premium coins or high-grade collectible coins, which is all nonsense, because they just don't understand the market dynamics. They don't understand technical analysis. They don't know Fibonacci analysis. They don't know any of these things because they're just salespeople on the phone just trying to make you buy gold. And that's the biggest difference you get with us. Stocks are a market, or equities are running up as an overbought, overstretched market that has gone up for the last few years, not having a major correction. But gold, you see, on the other side, people are saying, well, gold price is too high. Gold prices are too high, right? That's what they're saying. They're saying stocks are going up, but gold prices are too high. Gold is going up from an oversold market that has not gone up for the last 4 years properly.
Yep.
You have to understand, if your stocks are going up, they're going up, that's the fumes, right? They're going up because it's a very stretched, overbought market. So that's a market you need to get out of and go into a market that has not gone up properly for the last 3 or 4 years, right? It's only in the last 6 months that we've had a really good run in gold, and silver hasn't even started its run yet. That's the difference. So you're actually, by doing that, you're reducing your risk. So when you go into gold right now, or when you go into silver, you're not taking a higher risk. What you're doing is you're getting into a lower risk position that has a higher reward potential. Whereas over here, if stocks keep going up, it's just too risky. But what I want you to understand is the situation in the world and what's going on now has been corroborated by the price of gold going higher. It's showing you that this is not going away. And the smart money is coming into physical metals. That's the reason we've gone. Retail buying is not the reason why we've gone from $2,000 to $2,600, guys.
Retail? Yep, you're absolutely right. Gold coin sales actually plunge as retail buyers balk at record prices. This is the eagle, the gold eagle, and using it as a proxy for retail bullion buying. So to your point, there's bigger things going on here, guys.
Yeah, I love it. You know why? Because we have a rule that when retail is at the highest, that's probably when our clients are taking profit one day down the road. So right now, if you're moving your money from your IRAs and your 401ks and you're moving good portions of it into physical metals, understand you are coming into it like the smart money is coming into it.
Well, Mukarram, this has been awesome. You're always great to talk with, and I appreciate you doing this, buddy.
Really appreciate you and the audience, and hopefully we can help them. And please reach out to me. You have all my contact information and my assistant's contact information. Okay.